everybody, I'm Lorenzo Poeti and I'm here to share the views of the investment committee regarding this last quarter. As we know, it wasn't an easy quarter because all asset classes fell together, so it was a difficult period for portfolios. Usually stock and bonds tend to move in an opposite way, and this is good for diversified portfolios because even one loses, the other ones tend to go up. So portfolios tend to be more stable. This is not the case this year. And why is not the case? The fact is that inflation is staying high after the pandemic. So when inflation is high, all asset classes tend to look at inflation and to be correlated with each other. So if we look at the benchmark, which is usually the 60-40 portfolio, meaning 60% US stocks and 40% US treasuries, this portfolio is down 21% this year. So certainly is a difficult year for financial markets. The problem, as I said, is inflation. And so central banks, after having thought that inflation was temporary after the pandemic, now they are starting to hike interest rate very quickly. And why do they do that? They increase the cost of money, and so for individuals and companies it becomes more costly to borrow money, and so the economy slows down and the pressures on prices is less. So they hike the cost of money to slow down the economy and contain inflation. What is the problem? The problem is that the pace of interest rate hikes is very high. So it is not the level of interest rate that is a problem, because they were as high as now very often in the past, but it's the speed at which they are moving higher. So this is causing some volatility in the market. We're probably going to see more volatility during the summer, during the autumn, and probably the economy will slow down because the central banks are trying to slow down the economy to contain inflation. So if we want to see the positives of this situation, is that the market is moving to a more normal one. We're moving away from, let's say, the aberration of the last few years of negative rates. So now even bonds are back to be an asset class which is investable. Rates are at a more normal long-term level. So this is positive for long-term returns because market is going back to be normal. So as we said, we can expect more volatility, probably economy is slowing. And when are we going back to normal? Well, from the last crisis we know that usually economic cycles tend to be much faster during the last few years. So we've probably seen a lot already. I mean, much is priced of this slowdown of the economy, but certainly we have to be ready for more volatility. As always, our advice is to stay the course, not look at short-term volatility and not being distracted by market noise. Just look at your long-term objective and stay invested. Thank you very much and speak soon.